Welcome to the WSO Weekly Wrap-Up, where I talk with my team about the 5 most trending discussions in the Wall Street Oasis community. Enjoy. All right, everybody, welcome to another episode of the Weekly Wrap-Up. It is March 16th, around noon. So let's start it off, Matt.
Great, thanks, Pat. Interesting current events going on recently, guys. Not surprising at all. In the threads, we've been seeing stuff around Credit Suisse, SVB. So we'll lead with that one today. Pat, do you want to give a quick just summary on what's going on with SVB for anyone that's not too familiar with the bank run, and how this is going to affect the overall financial services industry?
Sure. So for those of you that were living in a rock last week, basically Friday, there was kind of a bank run that had started on Silicon Valley Bank. Short story, trying to simplify it, they had their risk management team didn't necessarily do a very good job in terms of hedging their risk to interest rates. So what happened is I think they had a lot of long duration bonds. And so when you have a lot of long duration bonds, like 10 years, theoretically, it's a pretty risk-free asset. But when interest rates go up as much as they did and as fast as they did, they do decline in value. So they had a couple $2 billion loss there. And then on top of that, they announced a capital raise. And I think the combination of those two things really started freaking people out. And I think since the deposit base for Silicon Valley Bank is so concentrated, it's like VCs all in this area where I live, right here in the Bay. And it's a lot of startups a lot in the same area. Like word spread really fast that there might potentially be some issues around liquidity. And so as soon as that spooky rumor came out, it's kind of becomes a self-fulfilling prophecy. People start ripping millions of dollars out of the bank all at once, and they quickly just run out of capital. It doesn't take a lot because of the fractional reserve system that we've functioned under here. So I think the Feds and then Signature Bank failed over the weekend. So the Fed stepped in on Friday, and then the Feds had to step in on Friday for Signature Bank over the weekend for the same reason. And I think the Feds announced Sunday evening that they were going to backstop all the depositors to try and kind of prevent contagion from hit all these other regional banks. And basically, I think, was that Sunday night or Monday night, Nabil? I think basically what happened was still all these regional banks started crashing in the market. First Republic was under pressure. I think they're still kind of under pressure because now there might be a distressed sale. It's just kind of a total shit show for regional banks. I think people are flying to probably ripping their money out and jumping to like the Bank of Americas, the Cities, the JP Morgans of the world.
Yeah, I saw there was huge inflows on one of the bulge brackets, I think, that are the major winners off this SVB class. But I'm curious, do we know if this capital raise that they were planning on doing was the result of the decrease in their bond values that they saw, or were they using those proceeds for something else?
I'm not sure, Nabil. Do you know?
They lost like 1.8 billion on this bond sale, and then they tried to raise funds to cover that gap that they had.
Okay, so
they lost
because of that.
because they had to sell early because of rising interest rates.
They had to sell early. And I think the accounting rules is you have to mark to market the whole like chunk of it if you sell any of it to cover deposits. So like if you sell like a piece of like this chunk of bonds, and they have to basically mark it to whatever it's trading at that point, and so then they have to show it as a loss. And so then it's like reality starts hitting from that rapid increase in rates. So it was kind of a perfect storm for them, but I think the more interesting and or scary part of this is the contagion aspect. So now we're seeing Credit Suisse kind of showing strains and cracks under pressure. They had some underperformance for a while now. And I think the Swiss government has stepped in saying they're going to, 50 billion, 70 billion, back them up or something like that, Nabil, to try.
Yeah, 54, I think. 54 is the right number.
They're
going to give like liquidity, basically loans or whatever to prop them up.
That's the Swiss government you mentioned, right? That's doing that? Because I thought I saw headlines say, I think one of the biggest shareholders of
Swiss Bank. It's another bank. Okay. It's another bank.
No, for Credit Suisse, I thought I saw something earlier today around. I think some Saudi business is a large shareholder, and they said I don't think they said they're not providing any more help. I think they said they maximize the help they could provide. So
they just probably like Switzerland government do this basically. because they can't
Got it.
get it above 10%. They can't buy more of the bank. Even if they give
Yes.
liquidity, there's no upside for them, right? So they probably
Yes.
just went and pressured the government into getting one of the
Makes
banks.
sense. Yeah. Yes.
Yeah,
Yeah. I guess
to give
ownership
liquidity.
laws, right? Is I guess the reason for
Yeah.
that. Oh, I didn't even think of that.
Yeah.
Makes sense.
Yeah.
Yeah.
Definitely interesting times. All right, guys. Well, that's I think we'll cut it there. I mean, we've heard enough on the news on SVB. It's all in the forum. So if anyone wants to learn a little bit more about what's going on, definitely check out the forums. But we'll move on to the next topic here. I think another interesting conversation to have naturally around interest rates. So we know next week Powell and the rest of the FOMC team are going to be connecting and coming out with their new interest rates for the economy moving forward. So Pat, what's your guess, I guess, on what are we going to do? I know there's been rumors going around either 25.
Take this one. Go ahead.
Yeah, Nabil, it's either 25 beeps, 50 beeps, or no change. What are you thinking, Nabil, on interest rates next week?
It depends, because like today, European Union against, like, it was a surprise they just raised it by 50. I think now the odds are like 0 and 25. Earlier, like before the bank run, the odds were like between 25 bips and 50. Now it's like 0 and 25.
Well,
I think they'll go for 25. Like, you can't just because if you do both, you're bailing out banks, and you have if you cut raising rates now, like suddenly you're gonna have massive inflation. There's a chance now that they do quantitative easing. Yeah, they do quantitative easing, and like they print currency and raise rates, so that kind of neutralizes the whole thing. Which is, I think, why like Yellen, all three of them were there for the thing, right? FDIC, Treasury, and Jerome Powell, like for the whole backstop thing. So chance that they're doing both at once kind of neutralizes it. So
was the EU behind the curve? I think they're behind the curve on raising rates a little bit, right, compared to the US, if I'm not mistaken. So that's maybe why they did 50 beeps versus
I think so, but they didn't. Yeah, they didn't expect 50, because usually in EU, like, you can't raise so much without having some protests or whatnot.
Yeah.
But this time they did, so that just is like a strong statement, I guess, that they're gonna be aggressive at it. The only thing is, like, that just puts pressure on the dollar as well, right? If you're raising rates on the euro, then you can't just sit around with 0 rates. So I think 25.
It's interesting because here in Canada, the last rate discussions was actually left unchanged, so they didn't do any additional movements. I guess it's all just based on each country's economy. My guess would have been, if the banks didn't start collapsing, we probably would have seen 50 beeps and then 25 and then a pause. Was just my guess on how things are rolling out, and the time of when these conversations would have happened would have been closer to Q3 on when a true pause would have came. Now I think I'm probably anticipating still 25. If things do continue to break and it gets worse, then a pause. But if not, it's just kind of where we're at now with a few collapses and a few cracks in the system. I personally think it's probably going to be 25, one more 25, and then a pause comes on the U.S. side of things.
I don't think they can go to 0 yet. I think it looks really bad if they go to 0.
I think
it actually works as a signaling mechanism. If they go to 0, it's like panic.
I think selfishly, a lot of people do want that pivot to come. But I think if you think with that long-term hat a little bit, you're going to see that we're probably worse off if you do get a pivot too soon. So I'm personally fine. Like, markets chop here, kind of go sideways a little bit until Q3.
And the data is kind of all over. The data is all over the place, because PPI came in less than expected, so it looked really good. I think yesterday or a couple of days ago, yesterday or 2 days ago.
Yesterday.
Yeah, so PPI came in really lower than expected, which was great. But CPI was still kind of elevated.
I think people forget, like, last year this time that we were in a bull market. I think this is when markets were kind of peaking around February, March, right? So I still think the year-over-year comps need a role where I think CPI and some of these pricing indicators really start, deaccelerating now and really coming into play. I think it's around like now, right? Because if I recall, I think February, March last year was still a really hot period. So I do think, once we start getting into the April, May, the Junes, and of course, obviously, a lot of this data is on, past information, which is a little bit difficult to make decisions based off of. But I think that's where
jobs are still hot though. Jobless claims dropped again unexpectedly, so like that's the thing. If unemployment stays under 4% it's going to be hard to think that there's any sort of drop in services. It's the services that are just sticky, right? Service inflation, it's not going down. So
Yeah.
even though price of eggs are coming down, the price of the price of services aren't. And so, yeah.
I think I'm in the boat. I think that's going to change. But one thing I've always thought of is, when it comes to investing and stuff, is always just to look in your own personal world. Like, I talk to people, I start hearing things more now, people struggling a little bit more conscious on costs.
Yeah.
Whereas maybe 6 months ago, everyone was just like, yeah, let's go out and spend money. But now I'm talking to people and you kind of hear it more. I want to save, or this is a lot more expensive. And you kind of see that behavior changing in your own personal life. And I just trying to apply that a little bit more into things that if I'm seeing it in my own bubble, I'm sure, the next person's seen it, another listener here seeing it amongst their friends and family. So
totally.
I think the slowdown is coming from like a consumer spending standpoint. Again, just this data is so back looking, it's hard to kind of make these observations on data that's, from a couple months ago.
I don't know how the Fed doesn't have a deal with like Visa or MasterCard to see the time
consumer spending, right?
Yeah.
Yeah, but then you'll get the people on the far right freaking out over government oversight and everything. So that's why that doesn't exist.
Just anonymize it, blockchain it. Come on.
Yeah, exactly. Get with the times. Get with the times. Exactly. Yeah. Right on. Well, yeah, definitely. I think it can go either way.
I mean, when you think about like how important that data is and like the millions of jobs at stake, and like it'd be really great if the Fed could always have a really nice smooth landing and thread the needle perfectly and have
real-time data, right? It's just having access to real-time data to make those decisions versus I think that's why people are seeing these collapses in banks now, just because maybe there's that assumption that the Fed go too fast, too strong, too fast. And because they weren't seeing the implications of it trickle through the system, you're not going to catch the breaks and the collapses ahead of time. It's just going to be as a result of the action. So, yeah, I mean, definitely, I think there has to be some modernization in the government. But people always say that, those industries are usually very dated and old school.
Yeah, it takes a while.
It's not surprising. But, anyways,
so
let's move on to the third and last topic.
WSO consensus, like 25 bips then.
Yes,
next
exactly.
Week. Let's see what happens next week.
Yeah. I'll lock in my bet on that for sure.
Lock it
25.
Okay.
25. We'll talk next Thursday and see what
if we were right
actually transpired. Yeah, it actually transpired. But anyways, last topic here, guys. I think another common theme we've been seeing the past few months: more layoffs. So this time, William Blair specifically, laying off a good chunk of the TMT team there. So let's kind of bring up that conversation from last week. Guys, any tips on how to protect your career in a market like this where there's a lot of layoffs, even just the whole macro situation as well? What are some best practices you should be doing if you do currently have a job, but maybe are on, like a team such as Credit Suisse where, you don't know what that looks like in 2 to 3 months from now. So Pat, we'll kick it off with you since you're the expert on this type of stuff.
I think honestly, like, the people coming into William Blair, the interns that are starting this summer, they're probably freaking out the most because it's what it implies is that the intern to full-time offer rates are probably going to be much lower than expected. Actually, that makes me wonder. Yeah, I think I haven't looked yet into our company database what that percentage looks like, but I will. I'll pull it up right now.
That's actually a really interesting angle, Pat. I think I'd like to steer the conversation that way. Like, if you are an intern joining now, and you're in a situation where that intern to full time move, that probability has significantly decreased. Should you be doing anything different while you're still interning there? Because I do think you do obviously move forward with the internship. It's
well, you try your damnedest to like get the full-time offer, but I think there's going to be a lot of heavy networking going on when you're working while you're working through that, because if you assume you're going to get a full-time offer, it's just not a good idea.
So how would you go ahead?
So I'm looking at some of this data. Let me go to the investment banking industry report because I think it's there. Yeah, sorry, go ahead, Matt. What were you going to say?
Well, I was just going to talk about like the networking aspect, like especially as an intern, and what I've kind of come accustomed to is the IB industry, albeit very large, it is a very tight-knit community. So especially as an intern, does it look bad if you're, after your days, you're networking, grabbing drinks or coffees with people from other banks, or, should you be a little bit, discreet with that networking, especially as an intern?
Yeah, I think you want to be
banks?
yeah, you don't want to be like announcing it to everybody. I think you should be discreet, but I think that the harder part is finding the time to go do that if you're actually trying to land a full-time offer because you're at the office all day and all night. So I think doing stuff on the weekends where needed. I'm looking it up right now here in terms of percentage offer rates. Here we go, intern offer rates. Let me see if I can find it. So like some of the higher ones are like, some of these smaller banks. Centerview has a super high offer rate, like 90%. So yeah, William Blair historically is in like the top 20 bank, like 88, 89%, 88.8% is what we have in our database in terms of intern offer rates. Yeah. So that's good. That's the good news for the William Blair people. They usually have extend almost an offer to everybody. So I think you still have pretty good odds. My guess is maybe that drops to 60, 70% this year. So your odds are still pretty good. Not like historically they're at like 60% and it's going to drop to 40 or something like that. So that's the good news. The bad news is, it's not like as guaranteed a thing this year.
And I could see, I guess, it being difficult to kind of keep that motivation throughout, like knowing that as an intern, you're going to have to put in that time. And if that offer rate has decreased, it's like, well, what's the point of kind of going so hard? But I would suggest
your odds are still good. I mean, your odds
are still good. I could see though how it does affect some motivation levels. Again, I think it's still, you obviously give it 150%.
I think people go harder. I think people are going to go harder and like make it more cutthroat. That's what I think. Everyone's going to be there like 7 a.m. and stay till like 2 a.m. like every day. Need any help? How about now?
I would say though to those individuals that maybe are a little bit nervous, that I think we could speak for ourselves, given that we have our own little talent recruitment. There's still a lot of demand for people in high B and that analyst level. So, if it doesn't work out at William Blair, I'm extremely confident. If you do the time, you put in the effort, you learn some great skills, then I think that could be easily applied and definitely find another role, another investment bank come the following summer for a full-time gig.
It still looks good, on your resume to have that internship. And so I think people are going to be more understanding and they're going to know about these layoffs. So if you don't get that full-time offer rate, the good news is it's not like a bull market where they're going to be like, what was wrong with you? Why were you the 1 out of 15 that didn't get the offer?
Yes, exactly.
Right. It's going to be like, okay, you were the, 5 out of the 15. Doesn't necessarily reflect poorly on you. You're the 7 out of the 15 that didn't get it.
You weren't the best, but I think it's what we've seen is like some of these firms are kind of like banging the table. They need people in there just because of the turnover the industry's seen the past couple of years. So definitely don't hang your head low if it doesn't, you don't get that offer. I do think there's still definitely
just stay active meeting people. Stay active meeting people. Make sure you're networking internally at the firm as well, so that increases your odds of getting that full-time offer. So that means like trying to meet people, not just sticking to your group, meeting people outside your group, making yourself known, and then most importantly, like helping the analysts and the associates, taking anything off their plate that you can and doing a good job checking your work. I think if you do those things, you're probably in pretty good shape.
Right on. Yeah. Any thoughts there, Nabil, for this type of stuff?
Not much. I haven't really worked through a recession or anything, to be honest.
So you guys are babies. You guys are babies.
Yeah.
In 08, I was going to business school. In 08, I was going to Wharton. So pretty crazy.
That I could see. That's tough to keep the motivation there. You're in business school and you're just like the
everything's
financial economy is literally collapsing. What am I doing here?
Well, I was trying to do WSO full time, so I was like, oh, whatever. And I remember on the forums, people were like, Wall Street Oasis is going to die. I'm like, no, it's like 3 people, dude. We're not going anywhere. I'm like, actually, our traffic's exploding. And we've seen the same thing. Our traffic is absolutely exploding because I think people are trying to find more information and get some insight. And so I think now is a time where WSO kind of shines because you can get some more kind of inside information around what's going on, what are the thoughts internally, intern offer rates, stuff like that, which is available in the investment banking industry report. That's the good news. I didn't know William Blair had such a high intern to full-time offer percentage. So that's the good news. Is it's not like one of these banks that historically offers like 50 to 60% and it's going to drop to like 30. It's you still have a decent shot. I think probably at least 50 to 70%. I'm guessing they'll still extend offers. So
and I think the main thing to kind of remind yourself is these times don't last forever. Where it's what we like to call a bear market. I think taking inspiration from some things you said, Pat, being around and when there was a recession in 08, when they were significantly bad times, that times do eventually change, right? And the prosperity does come. So it's all about just building throughout those tough times, because it's inevitable when the prosperity does come. You want to kind of be ready for that. And I think you even spoken to that about the business itself, where during these times, let's keep building, let's keep polishing ourselves for when the time is right. And I think that could be applied in a personal career perspective like this, where it's, if things are tough, keep building, keep growing, keep learning new skills, for when the bull market does come back, you'll be a shining star and ready to get picked off and full time. And
hallelujah.
Yeah.
I love
Anyways, on that note, let's keep the positivity there. We'll call it for this week. Amongst a gloom and doom news feed that I'm seeing everywhere. But typically, when I think the news feed gets bombarded with negativity, I think that's the tail end of these bad times.
Come on, crypto's ripping. We're happy. Come on, crypto.
Not yet.
Are you invested in crypto?
Yes,
a little bit.
Yes.
I would say I've caught an interest of it.
I'm still up even in the crypto winter. So there's that.
That's how you hodl.
A lot.
You talk to Pat for the hodling strategies there. Anyways, guys, great convo. We'll be around next Thursday to continue the conversation and see where interest rates ended up, and we'll see who's right here on the next movement. But thanks, guys.
Thanks.
And thanks to you, my listeners at Wall Street Oasis. If you have any suggestions whatsoever, please don't hesitate to send them my way, patrick@wallstreetoasis.com. And until next time.